Hi there. So, is Ottawa's real estate market heating up, cooling down, or simply returning to normal? Whether you're thinking about buying, selling, investing, or you're just curious about what's happening with home prices, this video will bring you up to speed on everything happening in the Ottawa real estate market. We will cover home prices, sales activity, inventory levels, interest rates, what it all means for buyers and sellers, and my outlook for the months ahead. Let's dive in. All right, let's start with the latest numbers. According to the Ottawa Real Estate Board, Ottawa's housing market remained balanced through the month of June, with activity slowing slightly as we entered the summer months. Buyers continue to benefit from more choice than we've seen in recent years. Here are some of the key statistics. 1,518 homes sold in June. The average sale price reached approximately $734,000, up about 1.5% compared to last year. The benchmark home price currently sits at approximately $632,000, which is a 0.4% decrease from last year's benchmark pricing, which was around $634,000. There were nearly 5,000 active listings, representing roughly a 14.5% increase over last year. Ottawa currently has about 3.3 months of inventory, which generally points towards a balanced market. What all of this tells us is that buyers have significantly more options than they did a year or two ago, while sellers can still achieve excellent results when their homes are priced correctly and marketed effectively. Interest rates continue to play a major role in buyer activity. Although many buyers have adjusted to today's borrowing costs, financing remains one of the biggest factors affecting affordability. Every rate announcement influences buyer confidence, and many people are watching closely to see what happens over the coming months. The good news is that buyers today generally have more negotiating power than they did a couple of years ago, and many sellers are willing to work with reasonable offers. Big news for buyers. Ontario's expanded HST rebate temporarily eliminates up to $130,000 in combined federal and provincial sales tax on eligible new homes purchased or built between April 1st, 2026 and March 31st, 2027. It is available to all eligible buyers, not just first-timers, for primary residences and long-term rentals. Now let's talk financing. While the Canadian government doesn't directly set mortgage rates, the Federal Central Bank, meaning the Bank of Canada, sets the benchmark overnight rate. As of July 2026, the Bank of Canada overnight rate is 2.25%, which dictates a standard Canadian prime rate of 4.45%. Mortgage rates vary depending on whether you choose fixed or variable term, and whether your down payment is under 20% or 20% or higher. Current mortgage rates, variable rates. Discounted rates currently start around 3.30%. These fluctuate with the prime rate. Fixed rates. The lowest 5-year fixed mortgage rates start around 3.69% for insured mortgages and 4.19% for uninsured bank rates. Rate advantage. Lenders secure the lowest funding costs because the Canada Mortgage and Housing Corporation or private insurers absorb default risk. Added premium. The default insurance fee ranges from 0.6% to 4.0% of your total loan value, which is rolled directly into your mortgage principal. Strict constraints. Limited to owner-occupied properties and capped strictly below a $1.5 million price tag. Risk pricing. Lenders lack government backstops in case you default, resulting in contract rates roughly 0.25% to 0.50% higher than insured options. The insurable loophole. If you put 20% or more down but still meet insured rules, as in the purchase price is under $1 million and a 25-year amortization cap, the lender may quietly insure the pool themselves. They will pass those savings to you via discounted rates. Maximum flexibility. Refinances, investment properties, and multi-million-dollar luxury purchases can only qualify via the uninsured pipeline. So, what does this mean if you're thinking about buying? This can actually be a great time to enter the market. With more inventory available, you have more options, more time to compare properties, and often greater negotiating power. My biggest advice is to focus less on trying to perfectly time the market and more on finding the right home that fits your budget and long-term goals. The best time to buy is when you're financially ready. If you're planning to sell, preparation has never been more important. Professional photography, strategic marketing, accurate pricing, and making your home stand out are essential in today's market. Buyers have choices. That means presentation matters more than ever. Homes that show well and are priced correctly continue to generate strong interest. Looking ahead, I expect Ottawa's market to remain relatively balanced throughout the remainder of the summer. Inventory levels are healthy, interest rates appear to be stabilizing, and new government incentives for first-time buyers could help bring additional demand into the market, particularly in the new construction segment. Overall, Ottawa continues to stand out as one of Canada's most stable housing markets, making it an attractive place to buy, sell, and invest. If you're thinking about buying or selling in Ottawa and you'd like to know what your home is worth, or simply want advice about your next move, I'd be happy to help. Feel free to reach out anytime. If you found this market update helpful, don't forget to like this video, subscribe to the channel, and hit the notification bell so you never miss future Ottawa real estate updates, neighborhood tours, and new listing videos. Thanks so much for watching, and I hope to see you for next month's Ottawa Real Estate Market Update.